Hey traders, Raghee here, and as we watch global equities, not just US equities, but global equities move, I can't help but think right now some of the better opportunities for us as traders, futures traders, ETF traders, stock traders, options traders, may not be in global equities. So I'm going to go through some of these because, look, even though I might trade the NASDAQ and the Dow and the Nikkei on the futures side, the fact of the matter is, in order to access things like the FTSE or the CAC Quran or the Aussie economy or the Chinese economy, Brazil, Mexico, sometimes the ETFs are going to give us an interesting alternative. So I know that usually we talk about futures, but there's some interesting plays happening where these markets are consolidating, and I'm thinking that we could see another leg lower. Now, I'll also maybe in a future video discuss, well, what would a leg higher look like, So understanding what a leg lower looks like is going to give us a lot of insight into what a leg higher would look like. So at the end of the day, we are consolidating. The market is definitely in a wait and see. We've seen some of the initial rallies and things like the EWA Australia or the EWG Germany, EWI, as the different economies are opening, and there's been some optimism about that. But I'll tell you, I continue to see a lot of heaviness in these markets, and as long as we are focused on the top of these ranges. So let's look at it this way. We have a range after a pretty significant downtrend that looks more or less like this. And I would consider this the resistance or the upper end of the range, and I would consider this the support of the lower end of the range. Now, regardless of what opinion you might be keeping, let's be neutral for a moment. If you want to be long, you want to do so from here. This is where you want to build your long position, from the bottom of the range. And if you're a fan of the short side, as I am, this is where you want to build your short position, from the top of the range. So top of the range, bottom of the range. And I always look at markets with this sort of matrix. Am I at the top of the range or am I at the bottom of the range? It doesn't matter if it's a trending or non-trending market. Where's the support? Where's the resistance? And really, succinctly, I could say, buy support, take profit at resistance, short support, take profit at, short resistance, and take profit at support. Not that you want to just kind of ping pong back and forth, but pick a directional bias. For me, that directional bias is going to come from the trend that preceded the sideways action. So like Italy, if we start to see some optimistic numbers on the open and we move up to the top of the range, I will short that, right? Another market that's on my radar right now, not just Mexico, but the peso as well. We start moving to the upper part of the range. Again, I will short that, but be very specific about which end of the range you're looking to short. So EWA, EWG, EWI. Here is EWY. This is South Korea. Again, I've been shorting the areas near the top of the range. Now, this one's a little trickier because this was the range to begin with. I believe it's the range that we've now contracted back into. But you might ask, what happens here? I will not consider. So this is a really good example of how I would change my mind. We'd have to break higher through two things. One, the 200 period exponential, and also the mean of the V-score. We'd have to break through those levels for me to really change my mind about really still focusing on the overall short side of this market, as opposed to being open to maybe a breakout buy or a breakout and then a retracement and then a buy on the retracement, right? So I'm still not quite there. I'm overall looking at a market that I believe the path of least resistance is still down. And again, these are global equities. So I know it's kind of an unusual conversation, but most traders, look, if you're trading futures, you most definitely are going to be comfortable with some ETFs. And I think ETFs have a nature that's much more similar to something that you're already likely trading, which is the NASDAQ, the S&P, the Dow, because we're talking about a collection of stocks. We're talking about a collection of sectors. So to me, going to the NASDAQ, or going from, say, the Dow or the NASDAQ to, going from YM to EWY, well, the difference is I don't have leverage, and so I'll use options, I'll use puts, I'll buy puts at the top of the range in order to capitalize on the lack of leverage that I have with an ETF. So I know it's something a little different, but I wanted to just bring this conversation up. It's something that we are talking about in the futures room, and I wanted to share it with y'all, and I'll see you in the next update.